Welcome to this video, and if you are affected by the stock market crash 2020, that's maybe the reason why you clicked on this video. And welcome to this vlog. Today we are talking about how you can protect yourself and your portfolio. I will tell you 3 interesting ideas to think about while this turnaround and freaking roller coaster happen right now on the stock markets, on the financial markets worldwide. So it doesn't matter if you are in Germany, it doesn't matter if you're in the US, it's affecting you most probably if you are an investor. And therefore, let's dive into right now.
Wolf of Dubai.
So first of all, I would like to ask you to give me a like for this video and also a subscribe, because 74% are not subscribed to this channel and I'm vlogging every single day. Now, let's talk about measure number 1. If you are an investor, then you might think about that, I'm currently down on my position, maybe 30, 40, 50%, doesn't matter how your portfolio is structured. Most of the portfolios are affected definitely by a double digit of percentage. Now, even the indexes like the S&P or the Dow Jones, they also fall more than 20% and are technically now in a bear market. So this means that the bull market is over, the party is over, and now many different experts saying that this is very much concerning, because it seems that this is not the bottom yet. And I just want to tell you a little bit about these experts that telling that there is still no bottom yet in the market. So it's not like small guys that are on the stock market here and there are small traders. There's Carl Icahn saying that there's way to go. There's Chamath, the chairman of Virgin Galactic. It's really one of the persons that I feel really is super smart and have really good ideas about the financial market. He's saying that there's still, no bottoms, and there's a couple of other experts that are really appreciating that I'm following on every single day. Chris Camillo, a trader very known in the scene. He turned $20,000 into $10 million. So he's also not seeing any improvement as of now, no bottom building. So actually, there's not only me or these experts, it's really shows that the market is really reactive to small news, to negative news, and we will not know how this all develops. However, these are the experts that are just saying that we are not yet at the end of this meltdown. And I just showing you this graphic here right now. Then you see that the bottom can be just when the bear market is entered, or like in the 1930s, that after 30-40% in the financial crisis area 2007 2009, it was rather 40 to 50% almost. So you can see that actually nobody can foresee how big is this crash and how we can protect ourselves, where is the bottom and so on. But these 3 things, especially the first one, is just doing nothing, because in the end of the day, as you know, and as you know now, nobody can time the market, not even myself or any out there who's saying he is the biggest guru. Nobody can time the market. As Warren Buffett said, it's time in the market. So this means by doing nothing, you are accepting that you lost 20, 30, 40, 50% of your portfolio, and you are convinced about your investments, right? You're convinced that, for example, I don't know, if you have Tesla, that you're convinced that Tesla will be around for the next 10 years, so the next 5 years, and then, until then, I'm guaranteeing you that the crisis is totally over, and we will look back and say, wow, this was an opportunity on the stock market to get really cheap deals. So if you're a long-term investor, and if you don't have any options, call options or whatever, sell this kind of leveraging products. And if you are just in stocks that you are believing in, just stay calm, maybe go on vacation or don't go on vacation, make a staycation and actually just switch off the financial news. Don't look every now and then in your portfolio and just do nothing. And with time, a couple of months or years, your portfolio will be back where it was or even more. Number two is actually more interesting, because actually if you are having some cash on this side, then you might want to buy any kind of insurance. Now, I did this personally. I choose this number two because I believe the market can go further down, and with this further downturn I can actually make money. And when the stocks go also down, with this insurance that I will explain in a second, I can buy more stocks, and then maybe I can build up a bigger portfolio, because I definitely underestimated the panic that is currently in the market, and I agree with some of the experts that it's definitely not the bottom right now. So therefore, if I'm talking about an insurance, it's about a put option. A put option, for example, on the Dow Jones or other stock market indexes like the S&P 500. So actually, to explain it real quick, it's if your portfolio is here and the stock market goes down, then portfolio loses in value, but your put option on the stock market will go down. So you see, it will leverage out, so the amount on your portfolio will stay the same, but you will have more into the option that you can take the money at one point if the crisis is a little bit more cooled down, and take this money and buy cheap stocks, and then you have more stocks at the same value of your portfolio. This is a nice way to a little bit the leverage out. You see big hedge funds are doing this, and I will link a video of one of my YouTube colleagues from the US, Dave, that actually explain it in much more detail, but this would be a video by itself, and it's a great video by Dave, so I will just put the link in the description right here. However, this is a very common hedging opportunity or hedging method that actually hedge funds are doing this to secure their position, and as higher or lower it goes, as more they are putting into this short or call options to leverage out their portfolio as an insurance. And number three, the final option that I can, trust or recommend here is actually, if you have some cash or cash incoming, like for example your salary or other, incomings, then take this money and buy more stock, because as I said, we cannot expect when this downturn will bottom up and then go back up, but we definitely know that it will at one point. So what you can do dollar averaging. So this means that every week or every month you add to your portfolio, and as the stocks getting cheaper and cheaper, this is a great opportunity. And if you look back 2007, 2008, 2009, all the people that experienced this, they saying, hey guys, by knowing and having this experience, and a lot of millennials investors don't have this experience because we had the 11-year bull market as of now, they have the experience that this downturn is actually something good and brings value of the stocks down for really good companies that will thrive in the next couple of months and years, and therefore you can buy now on discount. And however, you don't know if this is now a good price or a week after or a month after, and therefore just buy every now and then average you have the best price. It doesn't matter if it's go up or down, you always have the best price on average. And then in the end, what will happen to your portfolio? Your average price on stock will go down if the downturn continues, and then you have really cheap, good companies in your portfolio, and add value to your portfolio. And then when we are at the point that it's going back up, then it's really will go fast back up. And especially this turnarounds can be very strong, you know, and therefore, you know, if you miss this in the last couple of years or after crises, then you lost a really big amount of the gains possible over the last couple of years. And therefore I just can recommend that, you know, if you are happy to buy more and, you know, you can be not emotionally affected, then just do this. And, you know, all three options are really helpful to cool down. It's something that happens every now and then. On average, every decade we have something like this. You know, we had the dot-com bubble, we had the financial crisis, we're having now this health crisis, and we had the 1987 crash, we had the Great Depression, and always after a couple of years, you know, everything went back up. And I hope this gives you 3 interesting ideas. So if you liked it, put the thumbs up button and make it blue, so this video will get pushed. And if you are more interested into these topics of stocks and stock market, then also subscribe to this channel, because I'm vlogging on every single day. This is a great work and time that goes into those videos, and I hope you appreciate that. And I see you tomorrow, and without further ado, see you tomorrow.